All right. Welcome to Underground Crypto. Sorry, just lagging a minute behind here, trying to get everything perfectly ready and set up for the show that we're going to do. Let's go. Let's get on camera. There we are. Always good when we're on camera. What's up, guys? Everybody feeling? Thank you, Melissa, for that $2 sticker. You are the best mod around, I tell you. Always shows up. Always posts the link. Even right this moment when I'm forgetting to make sure the link is in the chat and it's pinned, doing it now, and then even sends a super sticker. What more could you ask for? Look at that 4-hour chart, guys. Look at it. Back above that 4-hour 200-day moving average. I think that might be a pretty important sign, guys. What do you guys think? And it's Tuesday. I feel like it's been a week between Monday stream and now, and it's only been about 24 hours or less. Pretty crazy how that works out. Let me get to the chat here. Shout out Struggle Heart. Welcome in as always. The Funky Ferret, Prime Minister, says what's up, everybody. Welcome in. And of course, welcome back to Underground Crypto, your daily crypto IQ show. Show designed to help you move beyond crypto headlines and understand how the system actually works and bring you stuff that's actually going to raise that crypto IQ and hopefully make you a better speculator in the market. That is the hope. That is the dream. So we started yesterday. I felt like yesterday was actually a pretty intense, deep, knowledgeable stream. But this series this week that we kicked off yesterday is called Who Writes the Crypto Rules? On Monday, we built a map of the different rule makers, right? So before we understand who writes the rules and what all that means, first we need to know all the players on the field, on the board game, and then what each one of them does. So Congress, the SEC, the CFTC, the Treasury agencies, state regulators, courts, private companies, developers, protocol governance. Tonight, we move into one of the most important and misunderstood questions in crypto. Is a crypto asset a security, a commodity, or something else entirely? For years, people have discussed this question as though every token needs one permanent sticker attached to it: a security, commodity, utility token, governance token, stablecoins, NFTs, but many don't quite understand the legal treatment of each token, right? A project cannot escape security laws merely by writing utility token, right? You can't just slap utility token on your website or in the white paper and just expect the SEC to be like, oh, okay, they're a utility, they're not a security. And at the same time, an asset does not necessarily become a security merely because people buy it hoping the price will increase, right? The economic structure matters. The rights attached to the assets matter, and the network's functionality matters. The promises made by the issuers matter, and the transactions through which the token was offered, of course, matter. So get this, in March 2026, the SEC issued a major interpretation, joined by the CFTC, of course, establishing a 5-part crypto asset taxonomy and explaining how a non-security crypto asset can still become subject to an investment contract. That gives us a much more precise way to discuss this issue. Tonight, we are separating two questions that are commonly mixed together. What is crypto asset itself, and how that crypto asset offered, marketed, or sold? Those questions can produce different answers. The crypto asset may not itself be a security, yet the issuer may have sold it through an investment contract. A token may later separate from the promise surrounding its original sale, but that does not erase possible violations connected to the early offerings. A token may be a commodity, but that token does not mean every company handling the token is, regulated. So there's a lot to it, and we're going to dig and we're going to deep dive and we're going to raise that crypto IQ. The quote of the day: the map is not the territory. By Alfred, and I can't even say this person's last name. The map is not the territory. And you'll see why that makes a lot of sense. Now, let's look at this 4-hour chart, and then let's go to the hour and stuff. I love to see that we are back above that 4-hour 200-day moving average, and we are going deep this week. Is that what we're looking at? I don't know. Campsta in the house. Prime Minister wants to know where you've been, Campsta. He's watching you. The reason why I really want to do this series this week is because a lot of this stuff is the more misunderstood part of crypto that is like the really important part of crypto. You see how it's like the regulators seems kind of dry, seems kind of boring. Don't really hear a lot of people talk about it, but then they're the ones who kind of decide what the rules are. At least they're one of the major players. There's multiple. So 1 hour above its 200, 21 crossing, 21 coming up to meet price action. Where do we go from here? We'll keep an eye on it. Again, I stay pretty zoomed out. I'm just glad that we're back above that 4 hour, but it's very, very hard to ignore this shoulder, head, and shoulder pattern potentially forming. And then the bigger shoulder, possibly head and shoulder pattern. So it really matters your time frame here, right? Like, are you trying to figure out what's going to happen in the next 3 days or the next 3 months? That becomes critically important. And one of my favorite parts that we kick off the show with is the What You May Not Know segment that we do right before we go to the crypto bubbles. Let's get into it. So the Howey test wasn't originally about stocks or crypto. So the Supreme Court's 1946 Howey case, Howey, that's what I meant to say, involved citrus groves, of all things. And we talked about yesterday how agricultural has a lot to do over perpetuals and things, because originally a lot of those perpetuals here in America and stuff were all agricultural goods like corn and wheat and stuff like that. So keep that in mind. Purchasers were offered plots of land alongside service arrangements under which the promoter would cultivate, harvest, and sell the oranges. Purchasers expected profits primarily from the promoter's work. The orange trees were not shares of stocks, and the land itself was not inherently a security. The investment arranged surrounding the land was the investment contract. That distinction is extremely important for crypto, believe it or not. Everything built upon the foundation that came before it, guys. Under the SEC's current interpretation, a crypto asset that is not itself a security can still be offered and sold subject to an investment contract. When buyers invest in a common enterprise based on reputations or promises that essential managerial efforts will produce profit. Hopefully you guys are following. That is why asking only is a token a security can miss the most important part of the whole analysis. The better question is, did the issuer sell the token as part of an economic arrangement in which the buyers depended on the issuer's promised work to generate profit? So the people that are offering you the sale or offering you the opportunity, if they are the ones who need to do the work to produce the profit, maybe that's marketing, maybe it's this, that, or the other, that is more or less where the problem lies. I'm ready to kick this thing off. Let's go over to the crypto bubbles. Let me get you guys over there. The market's looking decent today. That should mean all my undergrounders showing up to the stream, right? Again, I've been loving the intros that we do now. It really sets the theme. I hope you guys got your thinking caps on. You're ready to go. You're ready to learn. You're ready to raise that crypto IQ, as we say. So here's the daily. Crypto bubbles 1 through 100. Let's go ahead and just toggle the 1 through 1,000 here. Let's check out what's going on in this chat. Prime Minister says, just been knee deep in the market 24/7 LOL. Right on, right on. How's it going? Trying to decide whether short or long. Need to clear my mind. Well, you've come to the right place. Prime Minister says, I'm doing swell today. I'm all rested up. Oh, this was at Prime Minister. This is Melissa. Says, I'm doing swell today. I'm all rested up and enjoying the stream. How about you? Glad to hear everybody is doing well. And we will get back to the chat in just a moment. All right. So the biggest winner here honestly looks like 900 to 1,000, 2.6% to the upside, but it seems like a very common almost 2 or slightly above 2% across the board here. So let's break it down. I always click the wrong thing. Somehow it's an ad in this black space right here. Anyways, Zcash up 11%. Data up 9.3%. This is Streamer. It's up a lot this year. Wow. In the month, it's up 56,000%. I don't know. It has a name like Streamer. I don't know if that's a more serious project. One project falls out of the top 100 and another one seems to just appear. That is kind of how that works. Injective, Canton Network up 7%. Lighter, Virtuals. There's a project on Virtuals that I've been messing with that Melissa pointed out to me. It's a game. Definitely going to be featured on DeFi Friday. It's new. And we weren't getting a lot of buzz on it, but now that the market's turning around, maybe we're going to get a little bit more buzz. Yep, exactly. Look at all that green. It's like what we love to see, although a bunch of red gives us some great prices too. SWE up 5% to a high of 76 cents. Let's drop down another 100 here. And yesterday we did the stream like nonstop, full port, full speed ahead, and it still took 2.5 hours just to do what we needed to do. Pretty crazy. Derive up 29%. Derive is a decentralized exchange, right? For derivatives, that's kind of where Derive comes from there. 29% to the upside, a high of almost 19 cents. Catio, however you want to say it, is 18.8% to the upside here, with a high of about 79.5, so 79.5 cents. And remember, tokenomics and things have a lot to do with a lot of this as well. Just in the crypto bubbles, we don't go there, but we go there in our next couple of segments. If you need to know more about tokenomics, just drop a 111 in the chat. Allure was up a good bit yesterday. Looks like it gave it pretty much all back. Let's take a look at that on the weekly. Yeah, up and immediately back down. Allura, abstraction. We love chain abstraction, wallet abstraction. Abstraction in general, taking away the complexity of anything in crypto and hiding it from the user, basically making things easier to use and feel smoother is a big deal. I think it's what's going to bring in a lot more people, but it does hide some of the risks sometimes. Quantum resistant layer up 13%. Billion networks 31% to the downside. Ansem down another 22%. XPR network is up 18%. This just looks like an interesting project. I've looked at it a bunch of times. Non-playable coin also up about 13%. And Snaps kind of bouncing back. It was down a good bit yesterday, up 11%. And that is 200 to 300. So let's keep moving here and refreshes. Look at our price rundown since we got some pumps. It's fun to do the price rundown, to me anyway, after it's been a little bit, right? A little bit of the market being down, and then we get a nice little pop. We just want to assess how much of a pop did we really get, and it looks decent. $2.3 trillion in market cap, up 3.7% today, all of crypto. That's a good start right here. Bitcoin at 64,776, up 2.6% in 7 days, but it's up 4.4% in 24 hours, and a whole percent or 2 or 3 or 4. And Bitcoin is quite a bit of a move as far as money inflow. Ethereum, 1,879. I mean, this thing's almost back to 1900, up 6.8%. BNB $581. It didn't catch as much of this swing, it doesn't feel like, but it still caught some. XRP $8.11, up 4.2% in 24 hours, but really just kind of break even. there on the 7-day. We've been down on a lot of things on the 7-day. So as we scroll through, look at the 7-day, which is the last set of numbers here, or set of percentages. If it's red or, green just barely, that's kind of it, just kind of flipping what it's been doing for the last week. Solana, $77.53. Hyperliquid, $65.77, still down 5.4% in the last 7 days. Dogecoin kind of up to about 7.5 cents. Zcash, $557, up 16.7% in the last 7 days. XLM, 18 cents. Monero, $331. Cardano, 16.5 cents. Canton Network, 14 cents. Gram or Toncoin, $1.62. Litecoin, $45.15. SWI, 76 cents. Avalanche, $6.66. Where's SWI? Where did SWI go? There it is, 76 cents. Oh, I already did read SWI. Feel like I'm missing something here. Meme Core up 2% today, but still down quite a bit, of course. I'm waiting to see if this meme core is going to recover, and it is $1.23. How's everybody doing tonight? Look at all that green. Melissa says, I made an account for the Kendra game. Yeah, that's the virtual game. We'll definitely be talking about it on Friday. I'm sure we may show it off tonight if we get to it. Members only stream's going to be tonight. Yesterday I was going to do the members only stream, and I had this really weird thing happen where I got like this pop-up in the back saying I need to do a review of my YouTube channel. So I took care of that. It ended up not being a big deal, but it seemed like it was important. So tonight we'll do it. We've been doing a lot of trenches and if you don't know what trenches are, it's like the meme coin launch pads, pump.fun, a lot of that stuff. Prime Minister is very good at directing us through that. It's not what the whole members only stream is going to be about. Members only stream is for the members, right? But that is one of the things that we'll be doing in the members only. So you might want to come over and check that out. Prime Minister says good inflation data relief rally. Yeah, and Prime Minister is basically saying that a lot of this relief rally comes from the good inflation numbers that came out today. Let's go take a look at what is trending over on CoinGecko. Keeping a pulse on the market. So right off the bat, you got Arrow. And Arrow doesn't even have a 7-day percentage. That's how new it is. That's, you guessed it, Robinhood. He had a bow and arrow. You're going to see the bow. You're going to see the arrow. You're going to see the feather. I tried to combine the word feather and arrow. It didn't work out. That just happens sometimes when I'm trying to talk at a million miles an hour. So Arrow is what? I'm not 100% sure, even though I know I've looked at it. Just says DeFi. It's finance. This is built on the Robinhood ecosystem, which again is a layer 2 of Ethereum. So just like Base is a layer 2 on Ethereum, so is the Robinhood chain. Robinhood contract. Let's go check out their website real quick. I know we've gone over this already, but it's been a few days. Borrow against whatever you already have, right? Launch a testnet. So we break it down here. What is important about this? One, that you know Arrow is in the Robinhood, that you understand and recognize the branding. Like I said, you have the feather, which is on the Robinhood app. You have Robinhood itself. Obviously, you should know what Robinhood is as far as the historical story of Robinhood. The bow that he had, bows have arrows. So this is the branding that you would see, right? It all lines up. But what's really important here is that Arrow is a financial product. The takeaway is that it is still in testnet, so it's not really fully rolled out, as though, you know, and there would be your Robinhood. And then what sets them apart, right? So they're financial. We have plenty of financial. They're in a new ecosystem, so they could just pop up and not really do anything new, but maybe they are. Maybe they are innovating. That's what we want to know. So most holders raise cash by selling, triggering a taxable sale, and giving up every bit of future upside. Supply collateral. So what are they going to do about that? Selling triggers taxes. Idle collateral. Assets left sitting in wallets earn nothing and back nothing locked in a vault. The same collateral mints AUSD you can actually put to work. So that's the idea. Don't sell and make a taxable event. You can stake it right in your wallet, I guess. Fragmented liquidity. Liquidity split across wallets, chains, and venues is hard to deploy. Arrow concentrates into over-collateralized positions backed by real assets. So they're very much working on liquidity issues in crypto. You hear things like fragmented liquidity, but a lot of people don't really understand how actually important that is to the market, that the liquidity not be fragmented, which just means, broken apart in different places, siloed. Pudgy Penguins, of course. ADI, we took a nice look at yesterday. I've still got it written on my computer desk here because it's got a glass top. I can just write on it with a whiteboard. It's kind of nice. I think I'm going to do a video on ADI. I kind of like it. I kind of like what they're doing. I kind of like what do I want to say? Let's stop trying to say 3 words at one time. I like the momentum that it has. That's the word I was looking for. So Cash Cat is still just up ridiculous numbers, right? We've been really monitoring, me and Prime Minister have been really monitoring Robinhood, the launch pad associated with it, everything going on with that. The liquidity at first looked like a lot of it was going to leave Pump.Fun and go over to other launch pads. Then that launch pad had a bunch of hiccups and problems. Now it seems like all the liquidity is funneling back to Pump.Fun, and what was once going to be a hopefully competitor and a new craze of Robinhood coins is now not looking so hot. So they're going to need to figure something out there. It'll be very interesting. We're just watching the progression of it, right? A lot of times it's like we do with technical analysis. We project and then we see if it fills the pattern, right? And so in a way you can do that with just about anything by speculating and coming up with ideas, but not necessarily deploying capital yet, and watching, or just being smart and not deploying a ton of capital. Never financial advice here. You do what you want with your money. But yeah, just wanted to say that we've been kind of heavily monitoring this whole Robinhood chain, launch pads, meme coins, stuff like that. And I'll let you guys know everything that I find in real time if you are in the Discord, which is linked in the chat. Let's see. Oh, mistake. Trenches, check your wallet. Arrow gave free airdrops. I have like 8 they gave me. Then he says, oh, it's a mistake. It was Feather who gave airdrops. Yeah, I'm not sure. I've seen Feather as is tickling literally a feather emoji. Ticker is literally a feather emoji. Okay, that's interesting. Do you know what you got it for? Like for holding what that you got Feather? I don't know if I got it. You touch a lot of things that I'm just now getting acquainted with here. Pump.Fun is trending today. I just kind of explained that. You know, this all goes hand in hand. And you might not trade meme coins. Like, that might not be your jazz. For a long time, I didn't touch them because I didn't understand. I needed a good guide through it, and I knew that. Like, I knew that I needed a lot more information. Didn't know how I was going to get it if I ever touched it. And if I didn't ever get that information, I just wasn't going to touch them. So it's been a lot of fun to dive into that. But even my point here is, even if you don't trade meme coins and things like that, it's still very important to understand where the liquidity is moving in the markets. Is it all in Pump.Fun? Is it moving to Robinhood chain? That is important because it does touch a lot of different things and kind of signal the direction. Because like if meme coins on Robinhood chain are hot and liquidity is flowing there, then a serious project built on Robinhood chain might pick up a bunch of liquidity. But if it's the reverse and everything goes back, which is what seems like is going on right now, everything's going back to Pump.Fun because the launchpad and things is like locked and people can't make new coins on the Robinhood chain as far as meme coins and stuff. Maybe that hurts the attention that a serious project would need. So that is the understanding that we want to bring here. Raise that crypto IQ. Solana, Aave, dog with hat. There was like many versions of this meme coin coming out on Robinhood. It was pretty funny. Pith, Axie Infinity, and Reserve Rights. So again, I just want to touch on ADI. Right, so 879 million in the market cap. Max chart, we are on the max chart. It's at about $7 right now. Does look like it came out about December 8th, 2025. 100 million max supply. Not sure why everything is being so janky. I think it's just CoinGecko. 100 million max supply. Circulating supply only 125 million. So, you know, if you know your tokenomics, you take 125 million, you divide it by 879, and you would get $7. $7.01. You want to be real specific. Somebody out there is going to try to call me on it. Let's see. Melissa says, I have some feather. Chris333. Let's go. All right. Let's see. We got an Ethereum contract, of course. So ADI is Ethereum. Token ADI Foundation. It says infrastructure. Let's talk about it, though, right? ADI Chain is an Ethereum Layer 2 developed by the ADI Foundation to support governments, enterprises, and institutional digital infrastructure. The stuff that, you know, is a big deal right now, even if retail's not real excited about it. It's still a really big deal, and that is why retail most of the time misses the ball, misses the game, misses the cue that the market is buying when they think that it's bear market dumping. It is built on ZK Sync, or ZK Stack, ZK standing for Zero Knowledge, and powered by Airbender Prover, which is probably their own design here, which delivers GPU accelerated zero knowledge proofs for fast, low cost, secure transaction. So you don't even need to know what all that technical stuff is. It'd be great if you did, but if you didn't, just understand that it makes it fast, low cost, and secure transactions, right? Trustable transactions. The chain includes modular layer 3 capabilities. See how this stuff compounds? We've done lessons, whole weeks and days on layer 1s, layer 2, layer 3, what that means, modular by itself, what modular means. So as we're moving forward, if you didn't think it was important to raise your crypto IQ, you're going to get left in the dust because you're not going to know what stuff is. So it's time that we all just lock in and continue to raise that crypto IQ, because it just becomes so important. The more we do this show, the more I realize how incredibly on point it was to chase after this crypto education. All right, capabilities that let nations and enterprise deploy compliant, region-specific systems and for payments, right? Invoicing, land registries, and stablecoins. I set my light up here to have good lighting, and it is like blinding me. Makes it very hard to read if you're wondering why I'm making a lot of mistakes here while I'm trying to read something. So that is ADI. Matter of fact, I really wanted to touch on their website real quick. Let's do that. I don't want to spend a ton of time on it because we did go over it yesterday, but maybe somebody was not here yesterday. So the blockchain for real world impact. It launched on December 9th, 2025. It's got Kraken, ZK Sync. Let's see, you can't speed it up. Alchemy. Why ADI chain? So I thought this was really interesting. We'll just go over this little part right here, and I'll just do the bulletins and not the whole thing, even though I think it does a slight disservice. Legacy chain fail regulated economy. So right off the bat, here is why I'm thinking ADI has a chance to be important within infrastructure and ecosystem, because it is built-in compliance. Before, and I said this yesterday, before regulation was very speculative. Nobody really knew what was solid, what wasn't solid. The SEC was playing games. They were playing both sides and not really telling us what the heck was, the law and where we needed to be as crypto projects, and then turning around and trying to charge them millions, if not hundreds of millions, if not $1 billion, like they tried XRP, for not complying with rules that they never really told anybody. Anyways, moving forward, now we're coming into a place of regulation for crypto. So where before this whole built-in regulation might not have really mattered a lot to big companies, it's going to matter now. Then you have ADI, Ethereum security plus layer 3 compliance. This is basically how they're accomplishing this regulation. Ethereum secured settlements, Airbender zero knowledge proofs, and modular compliance at layer 3, right? L3 layer. And then, of course, why now? Digital infrastructure is reshaping, which is basically what I just told you. Regulation is more important than ever, and more big companies or serious players are going to make sure that whatever they touch has all the regulation compliance figured out and that they're not subject to any kind of lawsuit or any kind of thing like that. That's going to be important. As we see institutions and big players come in, that's going to be heavily important. So please understand that. That is the point that I really wanted to make with ADI, and ADI serves that purpose. Also, another big point is that I've been saying almost everything that we've been watching come out recently has been a service or geared towards big institutions and stuff like that. Serving them, maybe it's security, maybe it's, being able to read the blockchain and explorers for them and see if somebody was stealing their money in their own company. It becomes very difficult for these institutions and a lot of these very old school players to understand a lot of that stuff. That service is going to get bought, maybe not from the company we were looking at, but it's going to get bought by like almost every institution. They're going to have, like you have a financial auditor right now. But in today's world, if you take your traditional auditor and you pull him into the blockchain explorer, he's going to need a lot of education because he's not going to understand what he's looking at, and he's going to miss people stealing money, okay? And that's no good for somebody who has a lot of money being managed. Fear and greed index at 25, which puts us right in between extreme fear and regular fear, right? Yesterday was 22. 7 days ago was 20. A month ago was 23. So we've been hanging out in this region. Get into the fear, back into the extreme fear. Where do we go from here? We're very much right in between it. It's worth noting. It's worth always keeping in the back of your head where the fear and greed index is. Says they gave it to anyone trading on Robinhood. You most likely have some. Okay, cool. I'll take it. It's probably like, we talked about this one day, like they do airdrops and stuff, and they're like, we'll give 1 million people 23 cents of a coin. And it's like, that doesn't do anything. Like, I just don't think that that's like a really good, if I get 23 cents of a coin, it better do like a 1 million X for that to really matter. Even 1,000x for that to even matter at all. So, very interesting. Melissa, did you trade Robinhood memes? She says, yes, a few. All right, well, she's locked in. She might want to come to that members-only stream where we're going to get into a lot of that stuff, even though I already touched on it. So, where are we at here? We're going to bounce over to our talking points, the crypto IQ raising, because I want to keep it nice and in the forefront. Before, we would always try to throw the story, which is the story talking points, which is just like a different way of presenting the talking points. So maybe you could lock in before we get to the actual talking points, because sometimes they get deep, and this is just to introduce you to it. And then now it's even built into the intro of the show to touch on all of it, and that really, really, by the time we get to the real deep dive in IQ raising part of the night, you're really already acquainted with the topic and already ready to go deeper into it. And I'm liking the way this is working out. I hope that you are as well. So here's the problem. You always want to start with the problem. Just like any good company, any good product, they should start with a real problem that a large majority, masses of people believe is a problem, right? Solving problems that aren't problems doesn't usually equal success in business, all right? The one word label trap, that is the problem here. Crypto conversations often reduce a complicated legal analysis to one sentence. And this right here is a product of financial illiteracy, right? Which, I'll say it again because I feel like this is philosophically and conceptually super important. Most of the world, for all of historical times, the problem was literacy, the ability to read and write. And it separated, the nobility from the peasants, okay? Majority of the world, it still exists in some places, but majority of the world, most people know how to read and write. Now, the next hurdle, just like we had that literacy issue in the globe, in the world, now we have financial literacy to tackle, where most people are still heavily financially illiterate. this stream is very much pointed towards cryptocurrency, but it's all very much financial. So it's two birds, one stone, if you ask me. It's dialing in directly on the future where we're going, but also still taking the time to explain some things that have always been. The one word label trap. Things like securities, right? XRP is a security. You hear people saying that, or it's not a security. Ethereum is a commodity. This token or that token's a utility token. That NFT cannot be a security, or it is a security, as the project maybe they bought into is under scrutiny. As we've been under the heavy thumb of the regulator in the past, these have been hot topics. But these statements regularly combine the asset, the offering, the transaction, issuer, exchange, and purchaser into one category. And I'm going to run that back because this is really important. The statement is too simplified because it combines the asset itself, which would be the token, the offering of the asset, that's two separate things, the transactions of the offering, right? So the asset was there, they offered it, you bought it, however you purchased it. That transaction is a totally separate topic legally. The issuer, the person issuing it, that's a different legal subject. The exchange itself that maybe was in the middle of all of that, that is a different legal framework as well. And the purchaser, even that has its own legal implications, things like taxation. And then it puts it all in one category, and no wonder why people can't make heads or tails of it, because they don't even understand how any of it works. I myself, for many years and years and years of my life, of course, have been just as guilty of this. That is why I do this show very much for myself as well. So just to clarify, because I haven't said it in a while, this stream is not about me sitting here telling you that you're dumb because you don't understand this stuff and I'm so smart because I've known it since the day I was born. That is not what we're doing here. We are deep diving and growing together as a community. I just got to lead the charge, right? So I got to do a little bit of previous research and make sure that I give you guys solid information. So suppose a development team creates a token for a network that does not exist yet. So are you following me? A coin has been created for a network that hasn't really been built yet. Now, the team sells the token to finance the development. Seems like a logical thing to do. You want to build this network, you have a great idea for it, you make a token. You sell that token so that when the money comes in, you can hire all the developers and do all the things you need to do to make good on what you said you were going to build. It tells the purchasers that the team will build the network, secure partnerships, create demand, obtain exchange listings, and increase adoption. Again, going back to that old 1946 agricultural definement, right, of securities is from the beginning of the show where I was talking about the orange groves. Maybe you understood what I was talking about, maybe you didn't. But the point is that it is the team who is selling the token who is the one responsible to build the network, secure the partnerships, create them, and basically make the promise of the network happen on the behalf of the purchaser who gave them the ability, the monetary funds to go make it happen. A big problem with this that we found in crypto, right, is that you could be a serious team, right? And you're like, we're going to build this network. It's so cool. We're all about the fundamentals of crypto and blockchain and decentralization. And then you sell the token and you're all excited and $100 million rolls in. Well, what was your incentive for doing all this? A large amount of the team and people, the incentive was just money. They just wanted to make money. There might have been somebody at the top, you know, the CEO, the main guy. He might have really been a crypto fundamentalist, but the people who were involved around him probably were just hoping that this thing was going to make them a bunch of money. And they sell the token and hundreds of millions of dollars roll in, and they sell out and they go off because they don't even need to build anything. You see the point? This is a problem. And that's not so much what this teaching is about. I just really wanted to point this out, that sometimes your rug pull or sometimes your race to the bottom is just the people who were there from the beginning, who had good intentions when they first were pitched the idea and came on board. They were already holding tokens. They weren't made to lock them up, or they bought some on the market themselves. Now it's done well. There's no point in building anything. There's no point in building a network. You have all the money already, which is what they were in it for. and very few people are usually fundamentalists. That's why we talked about knowing who is behind your projects that you're involved in as best as you can. It can be very difficult, and making sure that there's somebody like Charles, who created Cardano. A lot of people give him a lot of crap, but he is a crypto fundamentalist. He actually believes in everything, as far as I know, and how he comes across, versus other people in the space who might just be in it for money. Anyways, we're going to move on because I don't want to get too off topic. So the team sells the token to finance development of the network that they promised everybody, but it's the team's responsibility alone to secure the partnerships, create demands, obtain exchange listings, and increase adoption. So purchasers are not buying the token because they can use the network today, meaning the token that they're buying right this moment doesn't have any utility yet. The network does not even function. They are buying it because they expect the team's future work to make the token more valuable. So they're buying it on pure speculation without any actual utility. So you can't turn around and say, hey, this token is a utility token. Do you understand what I'm getting at here? This is kind of the moment where it clicks, or it's going to click for you a little later, I'm sure. But they are selling it as a utility token because it's the native asset of a network, when in fact people are just buying it speculative because they're believing that people are going to build something and that token is going to be worth money. In that example, the token may eventually become a functional network asset later down the line. And when it does that, then it can be a utility token. But until then, the original sale may still involve an investment contract, right? Because you had a contract of investment, because purchasers depended upon the team's promised managerial efforts. Now change the facts. So now we're walking into a different example. The network is already complete. On the token launch day, the token is required to pay transaction fees. It's already a utility token. Participate in consensus or application. So it's needed for transactions, governance, which is participating in consensus, or use applications. So no central party controls the system. The original promises have been fulfilled, and the purchasers are no longer depending on one company to create the network. The asset may now have a very different legal relationship from the one that existed during the initial fundraising period. The token did not necessarily transform from one physical object into another, because it's digital and it's not physical in the first place, but what changed was the economic relationship surrounding it. This is the multifaceted world of crypto and regulation that is honestly quite lost on people, and for much of my experience in crypto was lost on me too. I didn't know any of this stuff. Let's see. Plague Dog's in the house. What's up, Plague Dogs? Plague Dogs, how you liking the series this week? That button up, though. Smash that like button for me if you would, and know that there's a link to our free Discord in the chat. Prime Minister, if you would do me a favor and let the good people of Godel know that we are live if they wish to come over. Not that we are live streaming, Godel yet, but we will. Usually venture capitalists get coins at very low prices, then dump it as it's sold to retail all the time. That is why venture capitalist projects can be a double-edged sword. Best to get in and out of those types. Exactly. And also, they can be good projects. You know, one strategy from, I'm always messing up his last name, but he's a YouTuber. He's been around for forever, right? His name is Joe Prainer, something like that. And he's been one of those, like, pre-sale, how to get in on pre-sales, stuff like that. But that whole world is you get in on the pre-sale and then you sell it when it comes out because it's probably going to be higher than it's going to be. But if you didn't get in on the pre-sale, where I'm going with this is when it comes out, it usually crashes. But if it's a good project, it's going to rebound over time That's just your venture capitalist dumping it. It doesn't mean the project's bad at all. Matter of fact, it hurts the project, unfortunately, when it could be a very good project. But it could be a great time to buy them. Because if you look at a lot of charts, you'll see it came out, it dumped heavily, and then it rebounded slowly over time and eventually made all new time highs from where it came out at. I'll show a chart at some point and kind of remind you of what I'm saying here. All right, let's get back into it. So the shift here is use a 2-layer classification. The first layer asks what the crypto asset is. So we're giving you the kind of the calculation, the breakdown, if you will, of how to understand an asset and if it's a security, not a security. And as there's more regulation, this becomes more important. So the first layer asks what the crypto asset is. Like, what is it? Is it utility? Is there actually a network like we just talked about, or is there not actually a network? Because it can't be utility for a network that doesn't exist. When the network exists, then it's utility, right? The SEC's current framework identifies 5 broad categories: digital commodities, digital collectibles, digital tools, stablecoins, and digital securities. Was Gary Gensler just heavily misunderstood? Poor Gary. Gary the Lizard. The second layer asks whether a contract, transaction, or scheme involving the asset satisfies the investment contract analysis. First question to ask yourself: what the crypto asset is. One of these 5 things, most likely: digital commodities, digital collectibles, digital tools, stablecoins, or digital securities. I would imagine a digital collectible would be a lot of NFTs, right? But then you can throw utility and stuff in there. It gets hairy. The second layer asks whether the contract, the transaction, or the scheme involving the asset satisfies the investment contract that was given. The second layer examines whether there was an investment of money in a common enterprise with a reasonable expectation of profit based on essential managerial efforts promised by others. Don't let this trip you up. We're talking about the people in charge actually being able to do what they said they were going to do, what they promised. This means a non-security asset can still be involved in a securities transaction. That's the big takeaway that we're trying to give you here, is that you can look at something and say this is obviously not a security, but it doesn't mean that there were no security transactions involved at any point in its sale, especially in its inception, getting up off the ground and raising money. So real estate is not ordinarily a security. Orange trees are not securities, but either of those can be sold through an investment arrangement that qualifies as an investment contract. So another way to put this is that if it can be defined as an investment contract, it can be a security. The same logic can apply to a crypto asset. That's where we're going. That's why it's relevant to what we're talking about. The analysis follows economic reality rather than a token's label. So it doesn't matter what they slap in their white paper or on their website. It follows the economic reality. So, what it actually is whenever it was sold. Payoff here. Classifications become a framework, not a guess. So now we're no longer guessing about what something is because we understand the framework. Congratulations, that IQ has been raised. Once we separate the asset from the transaction, the confusion begins to clear up. We can ask, does the token represent equity, debt, revenue, profit sharing, or another traditional security? Does it operate inside a functional blockchain network? Is it primarily a collectible like an NFT or something that doesn't have utility or anything like that? It's just sold as artwork, if you will. Like the original idea of NFTs when they were just pictures of something, it was art. Is it a membership, a ticket, credential, or identity tool that's speak for utility? Is it designed for payments or settlements at a stable value? Who controls the network? What did the issuers promise? Were buyers depending on future development to bring value to what they bought, that investment contract? Have those promises ever been completed? Does the current transaction still depend on the original issuer? This does not make every case easy. Classification remains dependent on facts, rights, promises, and structure, but it gives us something far more reliable than social media claims or a project's self-selected label. This is where we pause and we come back to it shortly so that we can break that up. How was that received out there? How's everybody feeling? Oh yeah, yep, you can make good money from them, just don't marry your tokens. Always good advice, I feel like. Never financial advice here. So let's look at the new tokens coming out. Why do we do this constantly? Well, for a couple of good reasons. You get a lot of things here that I don't see on anybody's stream. When I built my idea of a good show, it was what I was looking for that I wasn't finding anywhere else. New coins coming out. We've been on top of some coins that have done really well. And we've known about narratives before most people know about them. I'm still just now starting to see a small trickle of people, other crypto influencers and stuff, talking about X402 protocol and stuff like that. We've been talking about it for forever. And if you don't know what X402 protocol is, then I don't know if you've been paying attention to this channel. But it has everything to do with AI and agentic networks, AI agents, all of that stuff. And when Amazon and Amazon Web Services is getting into the infrastructure behind AI agents and their own kind of versions to comply with X402 protocols and things, which are, micro payments on the internet for AI agents and things like that, giving AI agents the ability to actually be involved in real time with the economy. That's a big deal. It's a big signal that big players are paying attention and positioning themselves. Before it's an everyday thing, they're going to own the rails just like they've always done. Where are you going to be at? Are you going to sleep on it because it sounded a little bit difficult to try to understand? Many will. Strategy, which I thought this was interesting, right? So this is Michael Saylor Strategy, the, publicly traded stock. Why this is on here, I'm not 100% sure, but it's in a funding round, which makes me think it's going to be a token. So we're going to get, is this going to be like a tokenized version of Strategy? Now, Strategy is famous for its holding of Bitcoin in its treasury. But if you're like me, you probably had absolutely no idea that it's been 35 years in the software industry. I wasn't really aware of that. I only know it because we talk about Michael Saylor. He's super bullish on Bitcoin, but it's easy to have believed that it's just a company who holds a bunch of Bitcoin and that's what they do. Apparently for 35 years, they've been a software industry. I was not aware of that. But they're mostly known for their holding of large Bitcoin reserves as part of a corporate strategy. Never know what you're going to learn, but it says it's in a funding round, and they've raised $10.1 billion. Now, is this, and it easily could be, a strategy of Michael Saylor's to come up with money to make sure his debt is paid? As far as the collateralization for loans that he already has to buy Bitcoin, and on top of that, is this going to be where he takes more of this money and buys more Bitcoin? Because that's pretty much what he's known for doing. He is great for the price of Bitcoin, and Bitcoin runs the crypto market, so naturally that is great for all of crypto. What is this? The Imperator.co? I don't know why my brain's not computing that word. It's fun to just read random things on the internet. Let's see. Is a professional blockchain infrastructure provider operating enterprise-grade validator nodes for proof-of-stake networks. So right off the bat, just reading that really says to me that they are going to operate these nodes on behalf of, say, maybe institutions. Because if an institution is like, okay, cool, we're going to invest in a, delegated proof of stake network like Solana or something, they're probably not going to be the ones running it. They're just going to spend the money to get it all up and going, and then they're going to hire somebody who knows what the heck they're doing. This is just how It's just good to understand how smart money and these big institutions work, especially in a new space where they're investing. If there's technology and things that they're buying into, infrastructure that they're buying into, they're not going to try to run that with the employees that they have, day trading and looking at data and research. They're going to hire professionals. So again, this is infrastructure, but this is also, positioning of companies for services for the big players. Say it over and over, and every day there's like 3, 4, 5 new projects proving that this is real and it's coming. So Imperator.co, I don't know why my brain doesn't want to say this, is a professional proof-of-stake validator and blockchain infrastructure provider specializing in the Cosmos ecosystem and interchain network. So this is a specialized, I guess, in Cosmos. The company operates enterprise-grade nodes to ensure high availability, security, and consensus participation for over 40 decentralized networks by maintaining a robust bare metal server architecture. The platform supports the fundamental block production and validation process required by modern delegated proof-of-stake blockchains. Exactly where I was going with this, what I speculated off of the short description, that's what they are. Bam, we have another service for institutions and big players. Velocity in its funding round. Velocity is an enterprise financial platform unifying cross-border payments and treasury management through real-time stablecoin infrastructure. Velocity is an enterprise-grade financial infrastructure platform designed to unify global payments and treasury operations through stablecoin technology. Founded by traditional finance and payment industry veterans, the company provides multinational corporations and financial institutions with unified ecosystems to manage both fiat, currency, and digital assets without relying on legacy correspondent banking networks. So again, Velocity, another new one, enterprise-grade financial infrastructures. Now, these tokens are trending, right? Why? Somebody's searching them. Somebody is searching these on CryptoRank because maybe they have some knowledge about them. For whatever reason, they are trending within CryptoRank's search engine, right? They've raised $38 million, and we can come here and we can look at the venture capitalists. I love that they do these tier 1, tier 2, tier 2, to I don't know where it ends. How far down the tiers do they go? But right off the bat, what strikes you is Coinbase Ventures, right? Coinbase Ventures, whoever is running the venture arm, I'm sure they're fully caught up to speed on what's going on in the institutional world, what they're looking at, where they're headed in the next 5 to 10 years, and that makes them position themselves for that, right? Dragonfly, a tier 1 venture capitalist organization, right? When it's a single person, they are known as an angel investor, right? So Axon Finance, we talked about this yesterday. They've only raised $2 million. Axon Finance is a AI native layer 1 blockchain providing non-custodial treasury infrastructure and gasless payment routing for autonomous agents. So this is agentic network infrastructure. So you have your AI, you have your AI agents, and then you have the infrastructure around it. Then you have resources to run that, which is your GPU and all of these kind of things. And then you even have the data feeds that are needed. There's a lot of things required to make this thing really work. This whole idea of all these AI agents and everything AI, basically, there's a lot that goes into making it happen, which is good because that means there's a lot of places where you could position yourself to capitalize speculative, on what is going on. Prime Minister says, I remember Gensler called every coin a security except BTC. But he was buying crypto himself. What a LARP he was. Exactly. I was not a fan of the Gary Gensler. But I very much believe he was propped up there by people. He played his position for the time. There's a lot more real smart people who put people in places and use them to, kind of get things where they want them, stall if they want to stall, create fear if they want to create fear, slow down things, speed things up. Like, that's the game they've been playing for a very long time, I believe. Pact Labs, right? Raised $7 million. Only has Tether. And what does it say? Does it say lasagna? Okay. I mean, it must be. Their symbol literally looks like lasagna. That's kind of hilarious. So Pact Labs is an on-chain credit and RWA protocol providing stablecoin infrastructure for asset-based lending, venture debt, and payroll payments. So they got the whole payroll thing in there as well, like ZBCN network, right? Zebekin. Or Zebek. I don't know why. Because they have the N for network. Zebekin just sounds really cool, but it's actually Zebek network, right? So let's see. The company provides institutional originators and global enterprise with compliant on-chain frameworks to manage loan books, debt facilities, and securities, using stable coins. So regulation and integrated legal templates that align with local regulators. So Pact Labs is going to be directed towards financial institutions. Why would they do that? Because they know them coming into the game combined with like real world assets that they own, because they own a lot of real world assets and real estate and stuff in a lot of these institutions, right? And then bringing all of that into tokenization and then being up to date with the regulator and, of course, the flow of stable coins. Here's a sobering thought for you. The Great Depression. I know I'm laying a lot of knowledge on you guys thick tonight. The Great Depression, fundamentally, because banks were allowed to make markets and they were allowed to profit off of the markets that they make, which caused a ginormous bubble, right? Well, after the Great Depression, legal framework made it so, and this is still the way it is today, a bank can make market, but it can't make any profit off of any of the market, right? And by making market, I mean this applies to stocks. This applies to all kinds of things. Like, they can provide the liquidity and things and the access and stuff like that, but they can't necessarily game it to make any profit. And this was all because of the Great Depression. And it's called the Great Depression. You don't have to be a historian to understand it was a big deal and it hurt a lot of people in America at the time. Well, with what's being pushed through right now, Clarity Act and all of this stuff, for kind of the first time, again, banks are going to be allowed to make market in altcoins, and they're going to be allowed to make as much profit off of it as they want. This is going to be one heck of a ride. Now, if you're somebody like Prime Minister who's already used to being in the trenches and dealing with altcoins, now this is very like meme coin. I don't know that they're going to go, make markets in super, super tiny meme coins right away. But when they realize how highly profitable it is, they're probably going to have a guy at a desk who's real smart, handpicked to do that for them, I'm sure. And those guys will become more and more people educated who are doing that till that almost becomes like a normal market, even for a bank. Anyways, the point is, I think you're going to see a lot more money flowing into those regions because now they're legally allowed to make money on markets that they create that they weren't allowed to do before. It's a big deal. Now, is it fully all the way through and past and they have this ability already? No, but from everything that we're looking at with the Clarity Act, it looks like it's coming and it looks like it's pretty much guaranteed at this point. But you know how anything guaranteed in life goes. Again, this is sauce. If you don't understand that implication, why the Great Depression happened, and banks making markets and then being legally allowed to profit off of it, then, you're basically creating the bubble that created the Great Depression on steroids. And that's not necessarily a good thing. How they're going to rein that into check, I don't know. Are they going to fix it before it becomes a big problem, or are we going to wait until we have, the Great Depression 2.0? Food for thought, right? The more you know, the more you can position yourself. But see, now I've told you. So now maybe you slightly understand. Maybe you even go ask some more questions and you find out some more answers. Maybe you pay attention to if the Clarity Act gets amended and these things get pulled out of it or not. If they don't, you might want to start positioning much much earlier. Anyways, Vana is a Ethereum virtual machine compatible blockchain for users owned private data. Let's see if we get a little bit more information. On the daily chart, this thing has been around for a while. Token generation event, the 16th of December, 2024. So all the way back to 2024. It's been as high as a little over $1 billion all-time high, and right now it's only 37 million, so it is peanuts compared to what it's been at one point. In 2024, it was a different market, right? The end of 2024 was very good for altcoins. The rest of the year, not so much. Decred, you should know it's over 10 years old. USX, obviously a stable coin, but in what ecosystem? To me right now, I see a stable coin. All I really need to know is what ecosystem is that? I believe it's Solana. Let's see. Am I right? Bang. How do I do it? I raise my crypto IQ every day. And even then, there's so much stuff to learn. I can't imagine, like, you know, think about it. You're somebody who educates yourself in a very specific category of information daily. And then think of somebody who does it once a week. And then think of somebody who does it like once a month. To somebody who maybe reads something about finances once a year. It's a big deal, guys. In my opinion, I've told you guys what I feel about, you know, financial illiteracy or financial literacy. And I think that might just be the key to how you change your life. And I'm not trying to say I'm some kind of like lawyer who understands every bit of legal speak, but I do spend enough time to try to understand those things. Anyways, let's keep going here. New tokens is what we're basically looking for, but this is all what's trending over on CryptoRank. And I noticed that CryptoRank has a very specific kind of purpose. And there's a very specific reason why CryptoRank is a part of this show that I don't think we've talked about a lot. So I'm going to talk about it. Digibyte is up 0.3%. Where's that guy who was a developer for Digibyte? He was in here talking about all kinds of stuff that was going on, and we looked it up. Like, we looked up what he was saying, and it was correct. Like, there were states who were going to put Digibyte in their treasuries and stuff. Is that because of how long it's been around? It has been around a really long time. In a lot of the financial world, especially governments and stuff, a lot of times something being around for a really long time signals that, I don't know, it's trustworthy or something like that. And I'm sure Digibyte is, but it just hasn't ever really been a hot token in a very long time. So anyways, it's interesting to see that getting searched. Is it going to do something? Apparently it had some upgrades back then when that developer would come in, but notice he doesn't come anymore. So we don't get that feed of information. Arc DeFi, or it's just like DeFi with the A thrown in there to signal AI. So Arc DeFi is a protocol combining modular economies and AI-supported DAOs, a decentralized autonomous organization. 58 million in market cap, 446 in all-time market cap. I love that they give you the team, even if, you know, Joy Boy is the founder. Luffy, they got Luffy in here. My son would think this was absolutely hilarious. Yeah, they're not doxed, obviously, but it does probably give you like quick. This is a good example. Like, this guy's not doxed, right? But you probably could quickly get to his ex. You probably could quickly get to his social, which would give you some ideas. This is how you kind of go deep, and we haven't done this very often. Again, this is an example about how a non-doxed, right, leadership of a coin is still, you can still get to their Twitter, right? You can still really look and read everything that they say. And you can start to get to feel for some things about them, their character, you know, more speculation. Does that make me feel like that is a super serious project? No. Sentimism AI, right? Sentient is a totally different project. Don't get these confused. Let's take a look at this real quick. Sentimism AI is a DeFi for autonomous AI-driven investing and intelligence DeFi workflows and real-world asset management. Why do I feel like somebody is messaging me over on Discord? All right, they are not, that I can see. Let's keep moving along. What else do we got? MetaDAO, Orezone Chain, been around 2.6 years. I love that they added this age thing here, right? Bitcoin, they say, has been around 16.3 years, so you shouldn't find anything older than 16 years, right? Can you imagine Bitcoin's about to be 20 years old? WikiCat, which has been around 4 years. Kite AI, not even a year. Kite AI, we used to look at and go over quite a bit. They're still seeming to remain pretty relevant, which is kind of impressive. Same like Allura. Like when we went over Allura, it looked cool because it was chain abstraction. And Allura came out, if you don't understand, back when we were looking at like Anoma. You know what I mean? Which, by the way, it pumped like 5-10% recently. But anyways, Allura came out in that era, and there was a lot of talk about chain abstraction, wallet abstraction, but also a lot of talk about intent layers, like the ChatGPT of crypto. ChatGPT is a good example that everybody can understand about intentions, right? You tell it what you want and it does it. You're not really super involved in how it gets you the answer, how it does the research, how it does whatever it does. Maybe you have it connected to Canva, and you know, I see all these people online who like have ChatGPT make like a child's coloring book using the image generator, right? And put it all together using Canva, because Canva has templates for coloring books, and then put it for sale on Amazon. Speaking about opportunities, it's a beautiful opportunity. It's said a little bit on the internet, but I don't think it's heavily saturated. The name of the game is to come into coloring books and things like that and do something really niche. Maybe you live in, I don't know, Arizona, and you do like an Arizona wildlife themed coloring book, right? With all the native plants in a tiny description, like a one-liner description for kids. Bam, that might sell heavily in Arizona. You get my point? But that is a good example of intent, where you could tell something. So bringing the idea of intention or intent layers, basically ChatGPT, to crypto is really important. My whole point was that Allura came out at that time period, and it's staying relevant and it keeps popping back up. I love to see that. It might be really building something. Virtual Protocol again. Virtual Protocol, very much tied in AI agents. They have a new game. I've been playing it. Melissa apparently just got herself into it today. Have you played it much, Melissa? It's interesting. My whole question here is, can we make any of the actual native token? The game is all right. It's a little bit wonky, to be honest with you. I need to know, is it really built completely on chain? I believe it is. And can I earn any of the native asset in it? If I can't, it's just another game at that point, right? Nervous Network, been around 6.7 years. That's not what we're focusing on. Block Street coming back, only been around 0.4 years, but this thing has been up and down and down and up. It is up 28% today, that Block Street. Dogelon Moore's been around for 5.2 years. Unify Network, Gravity. Again, a lot of these not necessarily new projects. Did I make this the top 50? I did, instead of the top 20. I'm like, why is this never ending? Wow. All right. So, of course, a lot of these older projects, Jelly My Jelly, I don't think ever really took off. Was supposed to be another social media network. You know, kind of the way that Zora was supposed to be an impressive blockchain social media network. I don't think anybody's done a good job so far of building decentralized social media. It just hasn't worked out. I thought Memecore was doing a pretty good job by basically copying Twitter, right? The formula that we already all know, and making it Web3. Just don't even... The reason why I like Memecore a lot is because their idea was like, don't reinvent the wheel. Everybody's already used to Twitter and that kind of format. Even Facebook uses that format a lot, right? And just add Web3 elements to it and upgrade it. It was working for a while. I think it eventually still will. Melissa says a little bit. Yeah, my main focus on that game, the new virtual game's called Kendra, is to basically see if you can actually get any tokens out of it. If not, it's just a game. A crypto asset and its sale are not necessarily the same legal thing, right? If you're still here, if you're still paying attention, pat yourself on the back. To me, these are the type of things, educating yourself, that is going to really push you forward and your ability to understand what the heck maybe you're even buying. This whole thing that we're going over today might not be the most intriguing meme coin conversation, right? But it might keep you from buying something that's going to have a bunch of security issues later down the line. So a crypto asset and its sale are not necessarily the same legal thing. The important concept tonight is the separation between the object and the arrangement. A token can be a non-security asset while being sold as part of an investment contract. Likewise, a commodity can be used inside a regulated derivative. Gold is a commodity, but a gold futures contract is regulated as a derivative. Real estate property, but pooled real estate investment can be a security. These are the nuances that you have to understand. The legal treatment depends on both the asset itself and the economic transaction built around it. The SEC's current framework has 5 categories. The first one is digital commodities, right? The SEC's 2006 educational framework identifies. And it's so funny, like, whether you find this interesting or not, I find it so intriguing, because this is the information that I feel like most people completely sleep on, and that's usually the information that is going to put you ahead. Assets connected to functional crypto systems whose value comes from programmatic operations, the ability to be programmed, right, of the system and supply and demand dynamics. The SEC currently lists examples including Bitcoin, Ethereum, Solana, XRP, Cardano, Chainlink, Dogecoin, Shiba Inu, Hedera, Stellar Networks, XLM, Avalanche, Polkadot, Litecoin, Tezos, Bitcoin, Cash, and Aptos. Why did they give us all of those? I don't know. It's a long list. Seems like we could have just gone with half of those. These examples are based on their characteristics, terms, and functions at the time of interpretation, not a universal endorsement of every transaction involving them. So, all of these things that are listed here are considered digital commodities. But not because every transaction that they have been involved in is free and clear of any kind of scrutiny, but because of the characteristic and terms and functions at the time that they were basically created. Does that make sense? Blues Guy in the house. What's up, Blues Guy? How you doing? Happiness is not something you postpone for the future. It's something you design for the present. Absolutely. We have control over ourselves. Don't have control over a lot of things, but we got control over ourselves. So happiness a lot of times is a choice based off of all the choices that you made leading up to now. If you put your true passion and your true, what's a good word, interests on the sideline for long enough, you will become seriously unhappy. That's why, just a side note, just breaking up this information here, even though my life is extremely busy, I still make the time to do this because I'm extremely passionate about it, and I also am extremely intrigued and want to learn this stuff myself. That goes with the passion. And so that is very much a part of my happiness, right? Does that make sense? And that's why I have the ability to show up 6 days a week and do this. For a long time, we did 7 days a week, but, still got to make sure the businesses are set proper so we can fund the 6 days a week that we do this, right? Digital collectibles. So we talked about digital commodities. Digital collectibles are assets intended to be collected or used, including artwork, music, trading cards, in-game items, fan tokens, and meme-related assets. A collectible's price can increase without automatically making it a security. However, fractional ownership or an investment structure surrounding a collectible can change the analysis. Digital tools. Assets performing practical functions such as memberships, tickets, credentials, title instruments, or identity badges. These are often non-transferable and derive value from their function rather than promise managerial effort. So the distinction here is that their value comes from their function themselves and not somebody who's offering this opportunity to you, investment contract, and what they're going to do to make the thing you're buying worth more money. Stablecoins. Stablecoins, assets designed to maintain a stable value related to a reference asset like the US dollar, usually. Permitted payment stablecoins covered by the Genius Act are generally excluded from the definition of a security. Other stablecoin structures can receive different treatment depending on their features. Now we get into what is a digital security, right? A digital securities, traditional securities represented through crypto technology. So just the almost tokenization or just wrapping it in a digital sense doesn't change the fact that it's traditionally securities, including tokenized stocks, bonds, or other instruments carrying the economic characteristics of a security. Putting a security on chain does not stop it from being a security. Tokenizing something is not a loophole. It's not a loophole for scrutiny of securities, right, of the SEC. All right. So we have this Howey examines economic reality, and Howey is referring to that 1946 court case, right? And I'm sure it'll get back into it, but in the legal world of lawsuits and judgments in a courtroom, usually you refer back to previous lawsuits and judgments as proof that something is the way that you believe it to be. Does that make sense? The traditional Howey analysis asks whether a contract, transactions, or scheme involves an investment of money, a common enterprise, a reasonable expectation of profits, which reasonable I think is very speculative, and profits derived from the efforts of others. The current SEC, Security Exchange Commission, interpretation places particular emphasis on relationships or promises that undertake essential managerial efforts. That includes promises to build or complete a network, create token functions, utility, develop important products, secure major partnerships, right? Manage the ecosystem, DAOs may be included in that, generate demand, make business decisions necessary for the success of the project. Routine maintenance or ordinary contributions may not carry the same weight as efforts essential to creating the expected profit of what they were trying to get you to invest in. A utility is evidence, not a magical word. Real utility matters, but the word utility does not control the outcome. A token may have some functional use, while purchases are still primarily depending on a central team's future effort. Questions include, does the function exist today? Can purchasers immediately use the token? Is the network operational? Is the token priced for consumption or speculation? Is it transferable, necessary for its function? Is the project emphasizing use or the future price appreciation? Does the token provide passive income or claims on business revenue? A token's function must be examined in practice, not merely described in marketing material. There's a big takeaway. Might go right over a lot of people's head. So, a token's function must actually be practically examined in actual use case, not just described in its white paper or some kind of marketing material. Number 5, decentralization is about control, not node count alone. A network can have many validators. while a small group is still in control. So there can be many validators in a network, but a small group of them can have primarily all the control. Software upgrades, treasury funds, governance votes, administrative keys, token supply, sequencing, fee structures, and major development decision. We've talked a lot about validators. I hope your IQ is up to date here. The current Security Exchange Commission interpretation describes decentralization in terms of whether any person, entity, or coordinated group has operational, economic, or voting control. That is more demanding standard than simply having multiple computers processing a transaction. So this comes into the validator's ability to have control in a business or network, because it's decentralized now, right? It's not centralized, but the daily operations, the economic aspects, and the voting inside of a DAO, for example, still deems itself as control of a network or of an entity, right? The entity could be decentralized and the entity could be centralized. Doesn't necessarily matter. And a validator is more than just multiple computers processing transactions. A token's relationship to an investment contract can end, right? And I'll say that again. Token's relationship to an investment contract can end at some point. Under the SEC's current interpretation, a non-security crypto asset does not necessarily remain attached to the original investment contract forever. So there was a promise. They said, hey, buy this coin. We're going to build this amazing network. You bought the coin. That is an investment contract, right? Later on down the line, that coin might circulate through many different places. The coin might be sold in different places that don't promise you anything of the same relationship, right? And so at that point, it may no longer be tied to that original investment contract. Separation may occur when the issuer fulfills its promise of managerial efforts. So if they said, hey, buy this coin, we're going to make it the utility coin of a network, using the same example, and then at some point, the network is made and it's actually put out, and the coin that you bought is the utility token for that network as promised. At that point, the contract, investment contract, is pretty much fulfilled. What they promised you has been done. The issuer abandons or fails to perform those efforts. That can also be a void of, investment contract. Purchasers no longer reasonably connect the issuer's promise to the asset. The network becomes functional and operates without dependency on the issuer. However, later separation does not erase an earlier unlawful offering. So if it was unlawfully offered earlier on, you can't just because now it's all sorted out say that somebody's not legally responsible for what happened in the beginning. This is kind of, if you're reading between the lines, this is kind of the whole basis of XRP's security lawsuit, right? If the original investment contract required registration or exemption, the obligation still applied when the offering occurred. Security does not mean illegal, and commodity does not mean approved. Man, let's look at this another way. Security doesn't mean bad, and commodity doesn't mean good. And that was a way that I really felt like a lot of people were interpreting this, probably due to a lack of financial literacy. When the whole XRP court case, and of course you have, just like you have Bitcoin maxis and Ethereum maxis, you had a lot of XRP maxis, same way you have XLM maxis. I mean, at that point, the whole maxi thing becomes heavily redundant. You just have people who are very hyped up and enthusiastic about a very, very particular narrative in crypto wrapped around a coin. That makes sense. A security has a legal framework around it. The whole illegal part and bad interpretation was just that the SEC was going to come after you if you didn't fulfill the obligation to work within the framework that they had already given, right? And commodities kind of got the clear, right? Because the Security Exchange Commission isn't really involved in going after commodities. That would be probably the OFTC. And we weren't seeing a large push by them to go after crypto assets. And that's why it became this good and bad thing. It's very interesting to look back on now when I remember kind of being there when all of that was going on. Securities are not illegal products at all. It's quite the opposite. Most things are securities, right? Stocks, bonds, investment funds, and many other legitimate financial products are securities. The difference is, in today's world, if you launch, or make it to having a stock on the stock market, you're going to do it the right way, because they've been doing it the right way that the SEC approves of for a very long time. It's very well defined. Sometimes there's hiccups, but for the most part, people don't have trouble navigating the security framework as they become a publicly traded company. The issue is whether but what I want to say here is that crypto, well, they didn't necessarily understand how to operate that, because they were such a new asset class that had different complexities than a bond or a stock would have. The issue is whether applicable registration, disclosure, exchange, brokerage, and investor protection requirements are followed. Did they follow the rules, basically? Likewise, commodity classification is not a government seal of safety by any stretch of the imagination. A digital commodity can still collapse in value, be manipulated, be stolen, be used fraudulently. A commodity can trade through an unlawful operated platform. Commodity can become part of a regulated derivative and trigger tax sanction, AML, or state law obligations. Classifications determines which rule may apply. It does not guarantee quality or safety. So we got to get rid of the idea of security bad, commodity good. In summary, right? Classification does not eliminate other regulators. So just because something is classified as a commodity doesn't mean that the SEC has no likelihood of looking at it. And then we had talked about this already a lot. So even if a token is not a security, other legal systems can still apply to it. The CFTC can regulate derivatives and pursue fraud or manipulation involving commodities. FinCEN, which is just fun to say, FinCEN can regulate businesses engaged in money transmission. The OFAC sanctions can affect transactions involving restricted people or addresses. The IRS, a different organization in the government, can impose tax obligations. States can require money transmitter licenses or enforce consumer protection laws. The Federal Trade Commission and state attorneys general can challenge deceptive marketing. And that's just going back and kind of outlining the different positions of these different organizations. The question is never simply whether the SEC has jurisdiction, right? The complete question is whether authorities regulate the asset, transaction, the intermediaries, people involved, third parties, and conduct involved. That was the talking points, right? And then we have this weekly topic education section, right? The crypto classification lab. And we're going to come back to this in a few moments. But before we do any of that, let's say hello to the great people over here at Godel. Let's see. I can actually chat now. And I've been having so much fun with this project. So I'm not going to re-explain the mines or Rush or any of that stuff. If you have questions about it, please feel free to ask. I'll be glad to answer. I really like this. If you kind of pay attention to what you're doing, I think this, again, everything is speculation. Never financial advice. I personally am very bullish on this. Looking at the format of projects that were just like it, or, right? And basically understanding how high this has been before. So, first of all, it's a lot like ore. An ore went as high as about $1,500 a coin. Now, I don't know how comparable the tokenomics are. But if you just go to the all-time high of Godel, which I don't know what the all-time high is, maybe Prime Minister can tell us, but Godel basically has been as high as at least $30 before, and it's at $2 now. It's a lot of fun. The community's really good. You know how like community is what makes meme coins pump? This has real function and stuff, but also an amazing community. I really have enjoyed what has been going on. You don't really have a lot of crappy people come in here. It's just been a lot of fun. And like when people win, you know, the big pot, this thing was up to, let's see, they just won right here. It was almost $2,000. It was $1,946. It was won by this APB. He's a legend to me. He bought like 150 shovels to win that lot. That's quite a bit of money, right? Anyways, basically whoever's the current leader gets the prize pool. If this thing every minute will randomly generate a number, if it hits the magic number 999, it'll pay out to whoever, right? So that's really cool. But what I like is that I bought, chasing after this, wanting to try it out, I bought like $60 worth of shovels, right? And the price goes up and down. Right now it's at about $2. Starts low. With every purchase, it gets higher and higher, right? My point here is I thought for sure I messed up. I spent way too much money on shovels. I'm cooked. You know, I'm going to lose money because as soon as you have somebody else buy a shovel and you're out of money to buy shovels with, you don't have the opportunity to win anymore. Or so I thought. Because of the derivatives, or not derivatives, I've been saying the talking points way too much legal jargon. The dividends from shovels, which is a percentage that's allocated to you because you hold shovels, right? Because it went so high, I ended up making in total $75, $76 off of it. And of course, then you minus what I spent. So I was up like $15 roughly, 13, 14, $15. I didn't do the exact math. I didn't lose money. That's a really cool aspect. So I got to buy shovels, right? Like this. You buy a shovel. I'll do one live. Let's see how quick they throw me off here. You got to really wait until it's like 10 seconds. Otherwise, they might get back in there before you get a chance. How crazy would it be if I just won this right now, right? Let's wait till it says 10, initiate, get down, and at 5 we will issue. Bang, we get there. Now we have 7. I just bought a shovel at $2. I'm the current leader. If this right now slapped 999, I would have won 4.2 or $332, 4.2 Solana or $332 worth of Solana. I would have just won that. But it didn't. And this thing ran to 25 Sol just earlier, and that's why I had made a good bit. I made all my money back on shovels, and then I even made some profit. It's pretty cool if you ask me. Camsta says, we still have YouTubers that release XRP updates every day. Yeah, well, I mean, it's genius because they drummed up such a very specific group of people, right, on a very specific narrative. Those people, like, they need somebody to feed them something bullish every day. It's something I noticed about the XRP community. I hold XRP. I love XRP. Don't get mad at me. But a lot of them who are not crypto people and they just have XRP because certain people shilled it to them, right? Well, they literally need somebody to tell them what they did was smart every day and come up with these big things for why they should keep buying more, or they should keep holding, or they should not lose faith. Most of them don't really realize any kind of crypto. Man, this guy didn't let me get more than one transaction. It's kind of greedy, don't you think? One of the people in here suggested that, like, when you buy a shovel, we should let the person get like 5 spins before somebody else buys a shovel. Especially before the pot gets real big. That seems like a good thing to do. Do you think Lab will ever pump again? I threw a couple bucks in there just in case. So far, it's only going down, way down. Yeah, Prime Minister, you want to answer that? He says that the team dumped all their tokens. I don't know. But then they're still like posting bullish on social media. So there's that. Do I dare war with this person? The cool thing is you can click on their thing and you can see how much money they have in their wallet immediately. Now they could have money in other places, right? All right, do we buy another shovel live? Throw them off. I'm up to 8 shovels. And of course, I didn't think I was going to hit the number, right? Is he going to let me have 1 spin? It's like you spend $2. Like, you'll let me have 2 spins. That would be cool. But again, it's competitive. There's no promises here. What is the mining rate? Yeah, the team dumped. I saw that. They did it sneaky. There you go. There's so many games being played. It could still pump. But that doesn't even mean anything. So, if you put tiny amount of money for the fact that there's a huge upside there, understandable. But I would not think Lab is necessarily going to do anything spectacular. How much you want to bet this guy throws me off at like 10 seconds or less in that current leader spotlight? I'm not going to sit here in PvP with him either. I don't want to get in $60 to shovels again. There's no guarantee the prize pool is going to go as high as it did. I think I got pretty lucky with it. But just because it's been so much fun and the community so great, I just definitely want to show them off a little bit. I'm having a ton of fun over here. You might too. I have spots, so just hold it. Only like $50. If I get 5, if it goes back to $5, oh baby, yeah. Good luck. And he did. Actually, there's a different person that threw me off of here. Nice. And let them PvP over it. Every time... Like, see, now I'm not going to bother buying. But I got 8 of them, and every time people buy back and forth, a percentage of the purchase of the shovel is distributed between everybody. A dividend, right? It's pretty cool. Let's go to the mines, because I'm not mining right now. Where's the mine rate? Where did that go? Let's refresh this. Where's the mining rate? Prime Minister, do you have an answer for this? The mining rate is gone. That's problematic. I quit mining earlier because it was at like 5%. If it goes to $5, yeah. Yeah, and that is like, that's what gets people into all kinds of investments. There's just too much upside, which can be great. And somebody could pump it just for the upside, right? Kamsa says, good night, bedtime for me. Okay. Have a good night, man. Thanks for stopping by and gracing us with your presence. As the lifer always says, your greatest asset, your time. You shared it with us. We appreciate you for that. I kind of want to get back into mining. But what is the mine rate? Unless they changed it on me here. And we're rolling into 2 hours of being live. It's amazing. That 2 hours being live happens so fast. It is incredible. Blues Guy says, thank you, God, for everything in my life. The good and the bad. Some were blessings. Some were blessings. Exactly. And I echo that for sure. You know. The meaning of life. A lot of people ponder it. If the meaning of life doesn't involve God, for me, I don't think you really are hitting it on the bullseye. Let's put it that way. This is really strange. This is the first time it's like not showing for me what the mining rate is. Maybe I'll go look at it on my phone. It's not showing on my phone either. I mean, I kind of want to be mining. Is it at 0? The mine rate is 0, and that's why it's not showing. sketching me out. And let's take a look at the portfolio as we build up the portfolio, right? We've got about 60 Godl so far. I got all my Godl through mining, right? And even a little bit of tips, you know. I've probably gotten like $25, $30 from this community just tipping me, which is pretty amazing and unheard of. Like, I haven't even been here forever and talked with everybody, and they still were tipping me and stuff. Pretty crazy. Like I said, the person who hit that jackpot for almost $2,000, they threw me like $10, and they threw a lot of other people. It's really cool. You just don't see that in a lot of communities, right? And now I know if I ever hit it, I know who's been good to me. Hopefully they're all on chat and easy to find. I recognize names. I don't have them all written down. But anyways, let's see. Prime Minister, where you at? Throw something in the chat. He's probably talking to the devs of the project right now, trying to figure this out. Where the heck? Let's see. Maybe it's because I'm not mining. Maybe we get back into mining here. Put it on all. Want to go like point. What am I doing wrong? I have stuff in front of my numbers here. 0015, I believe. For 25 rounds, let's go ahead and launch that. This is very strange. Why am I not able... Oh, it's gone. Okay. There we go. Now I can. And let's deploy. That doesn't seem right. Why is that only 29 cents? That doesn't seem right. Did I put too many zeros? Maybe that's too much now. Yeah, that's too much. Strigger Heart, what's up? And we're getting ready to switch into the members only live stream. So I hope you have a membership, and I hope you come over. I hope you hang out. That is the time for the members. That's where we get even deeper. Did you know that we could get even deeper into the sauce? And it becomes, this is very structured. Right, for my community members, like, this is very structured, the stream, where I got a plan and a weekly series and stuff like that. Staying on top of the market, educating, raising that crypto IQ. The members only stream is for the members, where we can get deep, but of course, the members have a lot of sway as to where we go and what we look at. Prime Minister must not be here with us. Let's get back in. Oh, the mining. Okay, I think I was right. I think the mining was legitimately less than 1%. Well, it's still less than 1%. This is very interesting. I'm like, I do want to be mining, but like, I don't want to mine a lot. So, like, they legitimately aren't letting me mine right now? Is that what's going on? Okay, the mining rate just jumped up. Now, maybe I can get in. All. There we go. Now we can get in. I don't know why it's at 29 cents, but that's okay. Because we can top up here, usually. Something seems a little off with this, right? A loop is not on. This has happened to me many times before. So does that mean I'm only in for one round? What is going on here? For some reason, this still messes me up all the time. I have Solana in my wallet. I don't think there's any lack of Solana in my wallet. Yeah, I've got $28 worth of Sol in my wallet. That's not the issue. I'm like, why am I so lost here? Is auto mining turned off? I'm so used to auto mining all the time. Like, do I really have to do this for every round right now? That seems kind of tedious, don't you think? And just shout out again, Melissa. Thank you very much for that super sticker. This is kind of crazy. I'm so used to being able to auto mine. Doing this for every transaction just seems really tedious. But I guess we're here for it. If that mother load hits, like, even with me mining like 30 cents per round, I'll still probably hit $5, $6, $7 worth of Godle, or 5 or 6, 7 Godle. It's actually more like $15 worth. It's pretty dope. I don't really want to miss that, to be honest with you. But like, when it gets to a certain point, do they like kick everybody off of auto mine? Only 16 people in the pool right now. I gotta figure this out. I must be doing. Oh, I know. I think I know what it is. Wow. I knew it was user error. I knew it had to be. That's what it is. I didn't put the rounds in. I didn't put how many rounds I wanted to do. Well, that makes a heck of a lot more sense. Now I'm in there for 221 rounds. We'll be monitoring closely. We're under 10% mining power, but if that mother load hits, it's going to be far more profitable that I was mining than not mining. It's so easy to get turned around in different protocols when you're not used to using them. Do I buy another shovel? Do I dare? Kick 3 IP off the top spot. And the crazy thing is, this thing can hit at like literally any point. Like, it can just hit whenever, right? So I told myself I wasn't gonna buy anymore. I'm not going higher than 10 shovels. Like, I'm not doing it. Dang, he already knocked me off and I didn't even get one spin. All right, I'm done with that. Got my hopes up there for a second. All right, guys, I'm going to issue this into members only live stream in the background. Hopefully you're going to come along with me. Maybe you are, maybe you're not. So in 5 minutes, it'll start the members only live stream. And there we can talk about anything you want to talk about. I hope you guys have enjoyed the show. Stregahart, do you have a membership? If you would like Stregahart, I would very much like to give you a free membership. Now, I can't gift it. Like, I can't just go in my settings and like give you a membership that I know of. I'd have to send you like, the $4, $5, and then you would have to purchase it. So if I send you the money for the membership, it'd be cool if you bought the membership. Now, if the stream's already too late for you and you're not going to be able to come to the members only live stream, just offering it, then maybe you don't even want the membership if you're not going to actually come to the members only stream. But that's completely up to you. And let's go hit some chainers real quick. Such an interesting topic tonight. I'm genuinely learning a lot in this series that we're doing right now. And I've been having a ton of fun myself, learning all of these different nuances about how to know if things are securities and stuff like that, how to understand the different regulatory arms and what they oversee, like what they're specifically in power of, I guess is one way to put it. I just find that super interesting. And maybe you do, maybe you don't. But it's all about opportunity, right? And by me showing up, you have the opportunity to learn it. If it's not valuable to you, then maybe you're here for the chainers, right? You're here for the DeFi gaming in the community, which is fine by me. Collecting all my stuff here. Look at that. They got like a golden peacock egg. That was wild. And I used to just go in here and sell everything in BNB, and now I'm like, don't really want to do that all the time, because I need items to make things. Before, I never worried about making anything. It was all about extracting all of the BNB always, and it still is. We got 2 minutes before we switch over to the members only live stream. We seem to have lost the prime minister, so it'll be interesting. And I think most people have already left because of the fact that we're going over to the members only live stream. Blues guy, you still here? Sometimes the numbers are not right on YouTube. I guess it's Tuesday. It's feeling a lot like a Wednesday here. Sometimes when that happens, then Wednesday is super lit. Let's see if tomorrow continues to kind of push and be highly, green. We might see a flip of sentiment here. It's a very interesting time. Like, everything with Iran seemed very negative, and then we have some good data come out and everybody's like, no, we're really bullish. It's like, okay, I didn't see that coming. 41 seconds to the members only live stream. Melissa's here. Can always count on Melissa. Shout out to you for being so dependable.